After years of tight monetary policy, the Central Bank of Nigeria has cut interest rates amidst easing inflation and cost of living crisis. I'm Bisi Omojokun, and my colleague and I, Chinua Okafor, will in this episode break down what this means for Nigerian households and small businesses and debate whether the move is a real lifeline or merely a hopeful signal.
Thanks for the intro, BC. All right, everyone. I'm Chinua. Welcome back to the Current Finance News podcast. Today, we're going deep into Nigeria and the recent meeting of the Monetary Policy Committee, or MPC, of the Central Bank of Nigeria. If we're honest with ourselves, after 3 years of interest rates inertia, Niger desperately needed this downward movement in interest rates.
Absolutely. We do, and the timing couldn't be more interesting. After 3 years of, pretty relentless tightening, the Central Bank of Nigeria's Monetary Policy Committee just shaved the main rate down to 27% after holding it at 27 times 5 for what feels like forever. It's their 302nd meeting. Not that most people keep score, but it's a big one, isn't it?
Yeah, though I couldn't even tell you how many Monetary Policy Committee meetings I've sat through in other countries, but this one matters because it finally signals, or at least suggests, a bit of a shift in mood. The CBN says interest rate cut is down to 5 months of declining inflation. Headline inflation's now at, just over 20% for August?
Yeah, that's right. 12%, down from over 21 the month before. I mean, these are massive inflationary numbers by global standards. But for Nigeria, that's genuine progress, especially after all those months of frankly brutal borrowing conditions. I always remember your reporting trip last year.
In 2024, right? Honestly, I talked to small business owners and a couple of school heads, and the phrase I kept hearing was brick wall. I'm not exaggerating. One shopkeeper showed me his loan agreement, and the interest was something like 33%. That's, impossible, really, for meaningful expansion.
And yet, the big policy levers are shifting now. The cash reserve ratio for commercial banks is also down to 45%, though that's still, pretty high. And they left the liquidity ratio at 30%. So it's not a dramatic turnaround, but it's definitely a new storyline for them after all this time. And hopefully things are moving in the right direction.
But here's the big question, which I kind of feel never gets answered fast enough. Does this make life any easier for ordinary Nigerians or for the small businesses running day to day? Because at the household level, when mortgages or consumer loans are involved, even 50 basis points can matter in the long run. But we have to remember, borrowing costs for Nigerian families and SMEs have been far, far higher than this headline rate.
Right. The real bite is with commercial bank lending, where rates for small businesses can easily blow past 30%, even with this rate cut, to be honest. So for SMEs, lower policy rates are only one part of the story, unless banks pass it on. Not much changes month to month. I read NECA's reaction to the cut. They're pleased, but they warn it's got to show up for real people. If it stays on paper, what's the point?
Exactly. Ordinary families on the high street must feel the benefits of this rate cut, otherwise it's a pointless paper exercise. And BC, I've been thinking about this interview I did with a tech founder in Kaduna, not even 2 months ago. She'd been trying to keep her payroll going, hiring new engineers, but said it's just not viable. The loans we're offered are near 35%, she told me. So she pulled back, no hiring, kept everything on ice till lending rates eventually ease, or she can scrape some new investment together.
And for most families, the rate cut doesn't mean their grocery price shock ends overnight, does it? Food inflation is still taking an absolute chunk out of the average family's budget. The official line is that inflation is easing, but core food prices are still stubbornly high, so that post-cut relief might be minimal for now.
Yeah, and it's not just about signaling to markets or saying help is coming. People need visible, tangible shifts in lower loan payments, in easier credit, in frankly cheaper food and petrol prices. The CBN can only do so much with rate tweaks, especially when so much depends on how the banks respond and how sticky prices have become across the board.
So we've got this new rate, the numbers have shifted just barely, and the market's gotten a signal. But now everyone from the Nigeria Employers Consultative Association to the Center for the Promotion of Private Enterprise is saying, look, that's great, but don't expect miracles. Everyone keeps coming back to the same list: exchange rate, stability, rural security, basic infrastructure. You can't just move the policy rate and hope for the best.
That's exactly it. Fiscal policy has to step up too. I mean, even with the asymmetric corridor holding steady around the MPR, basically giving the CBN some wiggle room in case inflation spikes again, it isn't enough on its own. Unless commercial banks actually drop lending rates or put more money out, these benefits aren't guaranteed. Some experts have flat out said the cut could be more of a whisper than a real rescue.
Yeah, that phrase stuck with me, to be honest. A whisper, not a lifeline. Because true deep-rooted problems like food distribution, dodgy energy networks, insecurity in farming areas, that all needs hands-on, coordinated reforms, not just small reductions in a single rate. I suppose it's always a balancing act, but unless the rate cut is paired with broader structural corrections, we might just end up here again, asking why nothing filtered down to everyday folks.
And unless fiscal reform gets serious, addressing the exchange rate, taming energy and transport bottlenecks, boosting rural security, we'll keep hearing that promise of relief without much actual change. So the CBN's move matters, but it's not the whole picture. I guess the real question is what comes next, and whether anyone's ready to follow through.
Spot on, Chinua. So, cautious optimism, a signal's been sent, but the big fix still sits on the horizon. That's where we'll have to leave it for now. But we'll be keeping a close eye as this unfolds. Thanks for joining us, everyone.
And thanks, BC. If you'd like to hear more about what actually shifts in Nigerian economic life after these big central bank moves, stick with us for our future episodes. Bye for now.
Take care, Chinua, and goodbye, everyone. If you like this podcast, please don't forget to like, share, and subscribe.
YouTube BC. O double O.